Hello and welcome to this edition of Taking Stock for the week ending the 14th of March 2025. I'm Kien, Trinh, Head of Research at Stock Doctor, and joining me today is our Senior Equities Analyst, Jason Yin, to break down all things share markets. Welcome to you, Jason. How are you doing this week?
Very good, Kien. Thanks for having me on again.
Great to have you on board. And but before we begin, just a quick yet important reminder: the information we share today is of a generic nature and shouldn't be taken as personal advice. Remember, shares are volatile, so past performance figures aren't a guarantee of future performance. Well, Jace, both the US and Australian markets, they've entered correction territory as the trade war escalates. And that's after the US did impose increased tariffs on imports from Canada, Mexico, and China. And Trump also ruled out an exemption here for Australia and implemented a 25% tariff on steel and aluminium exports to the US. So this aggressive trade policy, it has fueled concerns about inflationary pressures, which could lead to a global economic slowdown and impact corporate earnings. And so most sectors were down over the week, with gold, utilities, and consumer staples outperforming.
Yeah, that's right, Keen. It is very much an America First policy that Mr. Trump is pushing. But touching on some of the economic data that we saw, US February inflation actually came in slightly below market expectations, and this potentially could flag the calm before the proverbial storm. In fact, bankers have now slashed their 2025 economic growth forecast for the US to 1.7% from 2.4% on the back of some of these adverse trade policies.
Yeah, that's a bit concerning, Jason. Hence the reason why gold continues to hold up so well as it acts as a hedge to inflation and increasing geopolitical risks. Over the reporting period, though, we did add quite a few gold exposures to our star growth portfolio, which should help mitigate some of that volatility across the other star stocks.
Yeah, that's right, Kim. But not every gold stock acts like a normal hedge. For example, gold producer Ramelius Resources dropped around 20%. And looking at some of their latest announcement, management did release a planning update on their flagship mine at Mount Magnet. And at face value, it seemed fine. But Kim, can you take us through some of the details on why the investors were a little bit concerned?
Yeah, very interesting there, Jace. Like most reports, though, the devil was in the detail. And to summarize, though, the update did suggest that gold production will be about 20% lower than expected. And while capital costs are also forecast to be much higher because they are prioritizing expansion plans over their underground mining. And we expect this to have an impact on the earnings revisions and outlook metrics under Golden Rule 3. And with growth expected to be highly negative from financial year 26, we are reassessing our options given that there are numerous gold opportunities under review right now.
That's right, Ken. And also following this update, we are questioning the credibility of management. I mean, especially in regards to their obligations for continuous disclosure. For example, operational issues such as this should, we believe, have been released with their financial results 3 weeks ago. Thus, it would have allowed us and also investors to make more informed decisions. I mean, we're not accusing management of anything, but you would think that operational issues would have surfaced a little while ago rather than something that would have come in immediately. This is also a reminder that investing in gold miners comes with operational risks and is therefore not a pure proxy for just gold itself.
Yeah, definitely, Jace. We are questioning not just the operational issues, but also management's credibility here as well. But moving now from the volatile resources sector to a more defensive stock, gas operator APA Group. Now, its share price has been under pressure in recent years, but it looks like things are starting to turn around after it announced the first half 25 results. What factors contributed to the positive share price reaction?
Well, King, group earnings surged 9%, and this was driven by inflation-linked revenue growth and also strong performance across its energy industrial portfolio, which exceeded consensus expectations by 2%, which was rather positive. More importantly, the company reiterated that it did not need to raise capital and can fund its current capital expenditure program from its original funds. This will likely boost investor confidence, and potentially that's what's probably led to the positive share price reaction.
Yeah, that's a nice catalyst, Jace, given the negative sentiment in the past. And
Mhm.
APA did face quite a few challenges, such as UniSuper sell down. They also had high debt levels from the Alinta Energy acquisition, which kind of suppressed prices. And of course, this uncertainty around the energy regulator's decision on some of their energy pricing policies around the Southwest Queensland Pipeline and Baselink. Have these risks kind of diminished now?
Yeah, that's a good question, Ken. I mean, let's just take some of these headwinds and address them sort of individually. Regarding the first one, which is UniSuper's sell down, the super fund was one of APA's large shareholders, but sold down its remaining 4% stake in December last year. While such divestments can raise some concerns, UniSuper was facing mounting pressure to reduce its holdings in order to meet its climate objectives, which is what the media and also what the public is led to believe. Also, as well, in terms of the Alinta Energy acquisition for around 1.7 billion in August 23, this was funded via a combination of equity and debt. While the company maintains that its balance sheet remains strong and funds from operations to net debt ratio of 11% indicates a manageable debt level. So it seems like things are looking pretty good in terms of the financial stability. So other than that, the strong cash flow is offsetting some of those weaker balance sheet figures as well. Moving on, the energy regulator confirmed that Southwest Queensland Pipeline will not be subject to full price regulation, and this will allow the company more flexibility in terms of determining the price for its services. However, the energy regulator did reject APA's proposal to regulate Basslink, thus exposing the business to potentially higher price volatility on the spot market.
Yeah, very interesting, Jason. APA, they do have a track record of consistent dividend payments for the first half of 2025. Management did declare a distribution of 27 cents per share, a 1.9% increase from the previous year. And the company did reaffirm their full year distribution guidance for 57 cents per share, which is up almost 2% from financial year 2024.
That's right, Kien. And also the strong operating earnings and low payout ratio provides us a bit of confidence in terms of this future sustainable dividend profile as well. The stock is currently trading on a pretty attractive and partially franked gross dividend of around 8%.
In Under the Microscope this week, we take a closer look at a new Star Stock initiation, both a Star Growth Stock and Star Income Stock insurance broker, Steadfast Group. Now, Jace, how does this business generate their income and what is its key competitive advantage?
Well, Ken, Steadfast operates as Australia's largest general insurance broker network and also underwriting agency group. They generate income primarily through commissions and also fees through their network of over 400 insurance brokerages and also 29 underwriting agencies. The company's competitive advantage lies in their expansive network, which provides a significant degree of bargaining power with insurers. Additionally, their scale also allows for investments into technology and support services that enhance broker efficiency and also potentially client satisfaction.
Yeah, that's why their margins are quite strong, Jason. I noticed the outlook seems quite positive as well, with return on equity expected to rise 13% on the back of strong earnings growth. What factors are driving this?
Well, there's several factors driving this, Keen, including organic growth, and this is via the expansion of its networks by attracting new brokers and also agencies onto its network. Acquisitions have also played a pretty active role, including a significant expansion in the US market with the acquisition of ISU Group.
Right, and despite the strong numbers, Jace, I noticed the share price has been quite depressed, potentially on a few risks facing the stock. Should investors be concerned about these issues arising from the ABC Four Corners program late last year?
Yeah, that's an interesting one, Kien. For those that haven't really seen it, the ABC Four Corners program investigated the company in September last year, and they raised allegations against the company and management for not disclosing commissions and potentially conflicts of interest in the strata insurance sector as well. These claims have attracted regulatory attention and could potentially impact the company's reputation and also its financial performance moving ahead.
Yeah, that sounds quite concerning, Jace. So, what is the key risk here regarding the company potentially misleading their clients and providing kickbacks to strata management firms? And how might this impact their future earnings profile?
Yeah, I think those questions are on the are on everyone's mind right now, and the key risk lies in the potential regulatory actions, including bans on certain commission structures, which could potentially reduce future revenue streams. Additionally, any reputational damage may also lead to client attrition as well, which is not a positive factor. However, these could combined adversely affect Steadfast earnings growth and any future prospects if management do not address these adequately.
Right. So, with that said, Jace, the company did commission a report, I noticed,
Mm.
into uplifting the industry's best practices. They also have been working with the New South Wales government to improve current legislation and oversight, which is quite interesting given what's happened. As such, our current view and also the view from the investment industry is that the regulatory risks are quite low at the moment, and growth from its overseas expansion will more than offset the loss of revenue from these risks. Looking at under Golden Rule 5, though, Jace, does the discount to fair value represent an opportunity for investors then?
Yeah, the general consensus, Kien, like you said, I think a lot of the brokers out there are sort of flagging some of these concerns as rather minimal,
Mm.
and most of them have sort of backed management. So for those that are looking potentially for some value, this could present an opportunity, provided they are comfortable with some of the risks that we have mentioned earlier.
Yeah, definitely. And it's great to see, Jace, that with this stock, Robert Kelly, the founder of Steadfast Group, continues to serve as the managing director and CEO. And he brings over 50 years of experience in the insurance industry to his leadership role. So it's good to see. And over the period that he's been with the business, the share price has certainly done very well. With an increasing number of star stocks emerging over the reporting season, a question that is often asked from our investors and members is how do you construct a portfolio of so many star stocks?
Well, the first step is to determine your overall investment objective. For example, what is your stage of life? Are you investing for growth or are you seeking income? It is best to determine your ideal allocation to equities and what is your tolerance to risk. Once you know this, you can then use Stock Doctor's portfolio constructor tool within the portfolio director.
Yeah, and to access this feature, just click on the Portfolio Constructor button within Stock Doctor's Portfolio Director. Follow the instructions in the pop-up window to narrow down on your investor profile. Are you growth or are you income, or do you have a general, more balanced focus?
That's right, Ken. And after you have entered in your capital amount and the number of stocks, you need to indicate whether you're sensitive to share price falls. For example, if you're trend sensitive, the Stock Doctor tool will only recommend stocks that have not triggered an exit on the ST30 TSR or the ST Max.
You can also exclude certain sectors. For example, you might want to exclude cyclical resources from your portfolio because you are uncomfortable with the earnings uncertainty due to volatile commodity prices.
Finally, you'll be given a list of star stocks. Here, it is important to select stocks you're comfortable with. You can compare the stocks, but make sure you go through the golden rules and read the analyst commentary, especially around the outlook and also the active risks. And finally, feel free to call the analyst team if you're unsure about any stocks on the list. Remember to save this list as a watch list, print this list, or if you are connected to a Bell Direct account, you can trade this directly through this screen.
And if you have your portfolio within Stock Doctor as well, you can also use the portfolio optimizer to give you some other ideas as well. The portfolio optimizer here uses a powerful algorithm to come up with a list of suggestions to maximize the return to risk ratio, considering your investment objective and also considering the existing holdings in your portfolio as well.
That's right. And it's also important to point out that you don't need to invest in all the stocks in our star stock universe. But if you do want to replicate its performance, you can simply buy all of them using the tools that we've mentioned.
And also just make sure you set up your alerts as well to inform you of any star stock changes if you do so. But that's all we have time for today. Appreciate you joining us, Jason, especially, after this busy reporting period, it's still quite hectic for us, isn't it?
Yeah, that's right. There's still a number of opportunities that we're taking a closer look at. So it'll be definitely interesting to see what comes out over the next couple of weeks.
Yeah, definitely with the volatility, the correction going on. And please feel free to come along to our Lincoln Live sessions if you have any questions. on Monday. But for now, take care and have a happy, healthy, and prosperous week ahead.